What if you get an income tax notice? Should you be worried? What happens if you ignore these notices? And how should you be prepared to respond to such income tax notices? Hello and welcome. You're watching Business Today Television. I'm Sakshi Batra, and on this show, our focus will be on addressing everything that you need to know about income tax notices and what should you do if you also end up getting one. Joining us to help us understand more about these tax notices is a very special expert. Sandeep Jhunjhunwala joins in. He's the partner at Nangia Anderson. Welcome, Sandeep, and thank you so much for taking the time out for this discussion. It's a very important topic that you are joining us for, something that most people are unaware about, and they often panic even if they get caught in a situation when they get a tax notice. And these days, you know, the headlines are all talking about GST notices being sent to all the companies, running into hundreds and thousands of crores. But what really happens if an individual or a salaried class person really ends up getting a tax notice? That is what we want to understand through the course of our conversation today. First up, tell us the key reasons why a salaried individual can get a tax notice.
Thank you, Sakshi. So, as you said, the reasons could be many as to why a salaried individual could get a return, could get a notice. It could be, say, for instance, an example where the income which is disclosed in Form 26AS or the annual information statement doesn't coincide with the return of income filed, or the ATG deductions which are claimed are not commensurate to the income which is filed by the individual. It could also happen that the tax liability which is discharged by the individual is varying significantly on a year-on-year basis. So the reasons could be, multiple, at least in the case of salaried individuals, as to why, they can end up getting a notice from the income tax department.
Okay, so let's actually discuss all of these reasons one by one to get a bigger clarity for all our viewers right there. So there are practically 5 or 6 sections under which usually salaried class individuals may end up getting tax notices if there is any kind of a discrepancy like you've pointed out. So let's talk about the first section here, section 142, which is an inquiry before and scrutiny assessment. We should first discuss about section 143, one notice, that is an intimation notice. So that is the first one. Tell us more about it and why is this notice sent?
So generally a 143.1 notice, as you pointed out, is an intimation notice, and it is sent within 9 months from the end of the financial year in which the return is filed. Now, this is more of a summarized form of the return and the acceptances or the rejections that the department may see in the return of income filed. So say, for instance, if I said that my taxable income is X, my 143 intimation will say whether the department accepts X as to be my taxable income, or if they propose a variation into that. So this is more of a summary, of the return which has been filed by a taxpayer, and it lists out the reasons and the fields in which the department feels that a certain category of income or expense should not be accepted in the way it has been filed by the taxpayer.
Okay, so that's as far as the intimation notice is concerned. What about section 139.9, which is the defective ITR notice? When is this sent really to the individual taxpayer?
Okay, so defective tax, return could arise in multiple situations. Say for instance, a taxpayer has not filed the right form. So there are, as you would know, that there are multiple categories of forms
Sure.
which are applicable depending on the source of income, and also on the category of the taxpayer. Say it is an individual or a HUF for that matter, or a LLP. So if the person has not filed the return in the right form, then there could be a situation which could lead to a defective ITR. There could be multiple other situations. Say, for instance, if the return has not been verified properly as per the procedures given under the income tax return, those are the situations in which the department can end up sending you a defective notice. And there is no time limit which is prescribed for the issuance of a defective ITR. But generally, once this notice is issued, there is a 15 days time window which is made available to the taxpayer to to rectify the return. And in most likelihood, this generally precedes the 143.1 notice, the one which you discussed.
Okay, got that. Just before I go on to the next section, I wanted to ask you, Sandeep, that can one really revise the return after receiving tax notice from Income Tax Department? Is it possible?
Technically, no. The option to revise is available before you would have got any summary form of assessment, which is 143.1 or a notice of 143.2. But if you have got a notice which is proposing a variation, you definitely have an option to accept those variations and pay the balance tax liability, or you can deny those variations and you can clearly file your grounds for objections as to why one believes that those adjustments need not be made in the taxable income.
Okay. Now let's address the next section under which it is very common that one gets a tax notice in case there is discrepancy, and that is section 142, which is inquiry before scrutiny assessment. Tell us more about this notice. Why is it sent?
So 142.1 notice is generally a notice which will either ask the taxpayer to file a return of income in case the
Okay.
return is not filed on or before the due date, or if the return of income is filed and the department believes that there is a requirement to take more information or documents to process the return, then they may issue a 142.1 notice to seek those additional details from the taxpayer.
All right. And what about section 143.2, the scrutiny assessment? When is this one sent?
So this is again based on case to case. Not that all the returns filed are picked up for scrutiny assessments. There
Okay.
are certain algorithms which are set up. There are particular parameters based on which a percentage of the overall tax return is picked up for scrutiny assessment. Now, if there is a case where a return is to be examined in detail, and that's the situation which we call as a scrutiny assessment, then the department may issue you a 143.2 notice, which is a scrutiny assessment notice. And there's a timeline. This is to be issued within 3 months from the end of the financial year in which the return is filed. And this kickstarts the process for the scrutiny assessment or the detailed audit of the tax return, which is filed by an individual.
Right. Another question that a lot of viewers will come to ask, while they're understanding all of these sections under which various, tax notices can be sent, is that where exactly does one get to know that, a notice has been sent? How to check that notice? What is the process there?
So it's quite easy actually, Sakshi. It's available on the portal itself. So the taxpayer just needs to log in into the income tax portal using the credentials, which is their PAN and the password that they would have made for the login. And the moment they go to the proceeding sections, they will find under the pending proceeding sections itself if there is any notice and if there is any action required by the taxpayer. That is one way to look at it. Secondly, in case any notice is issued, it is always sent to the primary email address. And at sometimes there is a SMS also which is sent to the mobile number which is registered on the portal against the particular. So these are
Okay.
few ways in which one can get to know if there is a notice which is issued to a taxpayer, and you can accordingly take that matter up.
Okay, let's discuss the other section then. Section 148 is another section under which it is common to see that the income tax department may send notices to some people, and this is in the wake of income escaping assessment. What does this section really tell us about, and when is this notice really sent to taxpayers?
So this is a very special section, Sakshi, which is invoked in specific situations where the tax department believes that certain income has not been offered to tax, and there is a specific time limit for issuance of 148 notice. Uh,
Okay.
there is an extended window of 10 years if the department believes that the taxable income which has not been offered to tax is exceeding 50 lakh rupees. So in those situations, the notice 148 notice could be issued within 10 years from the end of relevant assessment year. In
Oh,
any
okay.
case, it is only 3 years from the end of the relevant assessment year. So we have a shorter window of 3 years from the end of the relevant assessment year, and we have an extended window of 10 years, which is applicable only if the income escaping assessment is more than 50 lakh rupees.
So in that case, what would you really advise someone? 10 years is a long time. Say for example, a person will completely forget in that year where all investments were made, where all income was garnered from, etc. How would you really advise investors to keep a tab on and keep a track of where are they getting income from wherever sources, and how to keep it in records maybe 10 years later also, because such notices can actually be sent 10 years later too?
Right. Yeah, that's a valid point, but I think a larger important point would be to probably disclose whatever is the rightful income that needs to
Sure.
be taxed, and therefore one should try and ensure that he or she doesn't land up in a situation where the tax department has an evidence to say that the income which has not been offered to tax is exceeding 50 lakh rupees, in which case this extended window of 10 years would apply. But yes, there is definitely a need to parallelly maintain all the documentation as well, even for safeguarding oneself if there is a notice which is issued under this section.
Okay, got that. Let's talk about the next section then, and that is section 245, which is adjustment of tax payable with refund amount. What is
Right.
this section talking about, and also when is this notice really sent to people?
So this is a notice which is generally issued if there is any outstanding tax demand for the prior year. And as I was telling you that 143.1 is a more of a summary assessment. So just
Yeah.
in case I filed a tax return where I am in a tax refund scenario, and parallelly there is an outstanding tax demand for the prior years, then the tax department can automatically adjust my outstanding tax demand of the prior year against the tax refund which is due now. So in those kind of situations, generally an intimation under section 245 is issued wherever the tax department is proposing to adjust your tax refunds against the outstanding tax liability of the prior years.
Okay, so we've already discussed the 6 kinds of tax notices that are usually sent to salaried individuals, and all of them have been explained nicely by Sandeep right here. So starting from section 143.1 notice, which is an intimation notice, which is regarding an ITR accuracy, then going on to section 139.9, which is for a defective ITR. You also have a section 142 under which a notice could be sent as an inquiry before scrutiny assessment. Section 143 2 would only have scrutiny assessment as well. Remember, these are the sections that you have to be very careful about as well. Section 148, income escaping assessment, is also a very important one. Again, over here, a long term tax notice could also be sent, so the periodicity is very important to keep in mind. Section 245, where adjustment of tax payable with refund amount is also given right here. Since you're talking about the refund space, I wanted to ask you one or two questions regarding this as well. Sometimes there is news that perhaps from the government or from the tax department, by chance there is a way that extra refund has been given onto a customer. Is that possible? And if that happens, then what is the next step that customer or the taxpayer should do?
Generally, such situations may not arise, Sakshi, where
Yeah.
the department would have processed an extra refund. At times, the confusion arises because there is an additional interest that the taxpayer gets. So, say for instance, at the time of filing my return, I would have landed up in a situation where my refund due is say 100 rupees, but when the department pays back that refund amount to me, there is an additional interest component that I'm eligible to get. So it could probably be misconceived as an extra amount that is being credited by the department, but could be a situation where this extra is nothing but the additional interest component that one is getting. Other than this, I couldn't probably envisage a situation where an extra amount of tax refund is being credited. If at all such situations arise, then maybe the most rightful course of action would be to connect with the tax department and arrange to refund that extra amount back to the department.
Okay, got that. Now, like I was pointing out, any time that an individual taxpayer ends up getting a tax notice, the first sign is to panic about it. That is what we usually see people going through, that, what if I've got a tax notice? They get very worried. But what is the ideal way to deal with a tax notice? What is the ideal way to respond to such tax notices? How would you really advise an individual taxpayer here?
Yes, I mean, I can definitely think of a situation where a tax notice can create a situation of anxiety in a common man. But actually, there is no need to get worrisome on those situations. The ideal way to deal with those notices is to maybe do a deep dive to understand what this notice relates to, because at times, as we discussed about multiple forms of notices, it could be just an intimation and not a notice per se from the income tax department. So maybe the first and foremost thing should be to connect with a tax advisor, just in case the individual is taking support of a tax advisor in terms of the tax returns that he or she has filed. If not, then maybe the tax notices should be carefully read through, and whatever is the course of action which is required to be given or required to be done as per the tax notice, I think that should be complied with within
Okay.
time which is mentioned in the notice.
Okay, within the time frame that's mentioned in the notice. So definitely keep a track of that, how long will you need to take before you can just reply to this. So, and within that time period itself, you're required to respond to the notice as well, and that is very imperative. Last question to you, Sandeep. Then, sometimes if there is a tax liability that's been mentioned in a tax notice, what happens if in the revised tax liability is not paid immediately? Is there any interest or a penalty that will be applied on it?
Yes, definitely. So we have two sections, which in particular deals with this kind of situation. So the interest trigger would come under section 220 of the Income Tax Act. If there is any outstanding tax demand and you already have got a notice of that demand, and that demand has not been paid to the department, then that taxpayer may end up paying 1% per month interest on the
Okay.
outstanding tax demand. And at the same time, there could be a penalty under section 221, which could be up to the amount of tax demand. But just to mention here that penalty is discretionary. There is an opportunity which is being given, and there are certain situations where penalty is levied, but the interest component is something that is more certain as compared to penalty, which could definitely kick in if the tax demand is not paid on time.
Okay, so there could be an interest and also a penalty aspect that you should be aware of in that scenario as well. Well, thank you so much, Sandeep, for helping all our viewers really get clarity as far as tax notices are concerned. Definitely, like you pointed out, this does cause a lot of anxiety in common people. But I do hope that after this course of discussion, a lot of things get clarified. Why and in what cases can you end up getting a tax notice, how to understand them, and what is the best way to approach them and to respond to them is also very, very important for you to really deal with it in a matured fashion as well. Many thanks, Sandeep, yet again for joining us on this special edition. And with that, it's a wrap on this special edition, but do stay tuned on to Business Today Television to catch up all the updates from the world of business and stock markets coming up right up on your screens.
What looks good to you on the charts?
So I think first stock that we are focusing is Dixon, a very strong buying action since last couple of trading session. It's a third consecutive day. We have seen that stock is forming higher high-low formation, and stock is now looking to cross its previous swing high.